I'm Teneale.
And I'm Kelsey, and we're financial advisors from 𝐴𝑙𝑚𝑎𝑛 Partners True Wealth, bringing you thought-provoking conversations around you, your money and your life on the Wealth Experience podcast.
Hi listeners, thanks for tuning back in. I'm pleased to announce that today we have Kelsey back in the studio with me.
Woohoo! Hello.
Yay! Kelsey's been taking a little time off, as you may know, following the birth of her beautiful baby boy. So welcome back, Kels.
Thank you. It's been 3 months now, so I've finally got my head above water, T, and you know what it's like with a newborn and a toddler, so it's been a few crazy months, but ready to get back out into the world a little bit. I'm really excited about being here today.
Well, thank goodness, because I'm sick of talking to myself.
You've been doing a great job. I've been listening to you, Teneale. It's been fantastic.
All right. So do you want to talk a little about what we're doing today, Kels?
Yes. So I thought on my maternity leave, I was having a little think about what can we come back and talk about, and I thought it would be quite timely to talk about the link, or maybe not so much of a link, between politics and elections and the share market.
Ooh.
So I think, there is people out there that are really trying to keep up to date with all the changes that are happening in the world and the political environment, particularly with Donald Trump entering the White House.
Yep.
And, Teneale, have you been keeping up to date with all that sort of stuff? I know it doesn't really interest you.
Oh, you know me. Yeah, I try and keep away from it. You have to be interested enough to have a look and try and understand what's going on. But I tell you, I don't love the news, and I definitely am not the biggest fan of politics. So, but have to be able to answer questions about it, don't we?
Of course, yeah. And so you don't find the dramatics and the theatrics around Donald Trump and all of that.
Well, I just figured that there shouldn't be theatrics around. That's not really something that I would want to relate to politics, wherever that may be in the world. But
that's exactly right.
That's
exactly
okay.
Right. But regardless, whatever you think of politics, I guess it just got me thinking that it'd be really great to talk about this for our listeners, and see, if you've got any more questions that come up afterwards about it, but hopefully we can cover the topic today enough to answer some of those questions that people might have in the back of their minds. So
yeah, and investors do ask questions about this area quite frequently, particularly when it is in their news headlines.
They absolutely do. And there seems to be this speculation amongst investors around share markets around election times. Seem to drive either good performance or bad performance, and there's certainly some really misleading headlines out there in the news that can kind of make this something that people perceive as the reality. So just for a bit of context, if we look back at 2024 that's just gone, I actually read somewhere that it was one of the biggest election years in history, with over 76 countries voting.
Really?
So yeah, and that accounts for 60% of the world population. So that's a lot of the world focusing on changes in the political environment over the course of 2024. So as you can imagine, it's been really high focus time for politics.
Absolutely. I mean, when so many people are thinking about all the shifting sands with the government, that can be pretty scary, right? And people can start wondering about the stability then of economies and their own finances, and inevitably what's happening or what's going to be happening with share markets. So you sort of mentioned some of those headlines and how they can feed into the emotions of the masses. I thought we'd pick out a couple that we've stumbled across and just talk to those really quickly.
Yes.
There was one that read, US stock markets best week since Donald Trump's election. So that's great. People go, Donald Trump's been elected, everything's looking positive. 3 days later, another headline comes up, S&P 500, which is the biggest 500 stocks on the United States Stock Exchange. And it says S&P 500 stocks are flat due to tariffs discussions.
What a quick turnaround.
Yeah. Yeah, we were good and now we're not.
So you can see how easy people are going through the emotions of the highs and lows.
Absolutely. And we kind of sit there going, well, which one is it? What do people believe here? Are markets at a high because of the election, or are markets flat because of the new president-elect? And truth be told, politics has no direct correlation to how markets will react. But, using this as an example, we can see that there's very short term movements that can happen and should be expected to happen in markets, right? And if our listeners think back, I know on some of our earlier podcasts that we've done, what we do know about speculating, which is what I'd be calling this, on what's going to happen in the short term with your portfolio, we know that can lead to wealth destroying decisions because it's really hard to get it right without that crystal ball.
But if you think about those headlines, by the time you've seen that first headline of share markets are doing really well, would you deem that as too late? Because if you buy in on that day, wouldn't you be saying that you're buying in high?
Well, that's exactly how emotion and investing lead counter to one another. Exactly right, Kelsey. I can imagine, if I was seeing that first headline, I thought, great, I've got some money, exactly like you're saying. It's been sitting aside. I'm going to drop that into US stocks right now. And then I eagerly watch my portfolio every day. Sometimes I might watch it intradaily. I see it move up. I see it move down. And then this second news headline pops up and I start regretting my decision. Oh, no. What if I've got it wrong? What if I don't make a lot of money? What if, US stocks continue to plummet from here? What if I needed that cash? If I needed that money to fund my upcoming expenses, I better sell out. I got to get out now, Kels, while it's too late. Could you imagine if I made every investment decision like that, Kels?
It'd be very stressful.
Yeah, and I'd be stuck in this perpetual loop of buy, sell, the emotion of the happy and the worried. And every single time I'm making those decisions too, it's triggering costs to get in and to get out of markets. So now I don't have a set plan for the amount of return that I'm actually trying to achieve. And ultimately I'm letting emotion drive my decisions, which can lead to buying high, like you're saying, and selling low, the complete opposite of what we want to achieve for a good investment outcome.
That's exactly right. So really, what we're saying is don't base your investment decisions just on the political markets and what's happening there. But really what you do have to look at is, what does history tell us about how markets do actually respond around these times? Let's have a look at some of the data.
Because it's not new, right?
Yeah, exactly right. So let's have a look at some of the numbers, being financial advisors that we are.
Exciting.
That's the best part. So there's some excellent content that's been summarised by Dimensional Fund Advisors. And for anybody that wants to see this as a visual, which I highly recommend because it's so much easier to digest, we'll leave it in the link of the podcast summary for our listeners so you can go ahead and have a look at that. But the data directly shows the information on whether there's a correlation between presidents and share markets. In particular, I think this is based on the US share market, the S&P 500 that we just spoke about.
And there's a lot of data there too, which what we think is great about the US is we can go back for such a long history. We don't have as much history with US, with Australian stock markets, so I think it's great using this as an example, Kels.
Yeah, that's right. And we're looking at the US markets. It's one of the biggest share markets in the world. Obviously, it's quite there's a lot happening in that space at the moment, so just relevant. But there's lots of different markets that we could look at. But if we look at this, I call it an infographic. I think that's what it's called. That the Dimension have provided.
I love it.
Yeah. It shows us then for each president what the share market return had been during their term. So if we go all the way back to 1969 to 1974 when Richard Nixon was in power, it was a negative 2.9% return during that time.
Oh no, so he didn't do so great and it's his fault that markets weren't performing, right?
Exactly right, all his fault. And then we go forward a little bit more in time and we look at Ronald Reagan. Reagan, am I saying that right? Not too sure.
I guess it depends if you're doing it with a US accent or not. Yeah.
Anyway, you guys know what I mean. And from 1981 to 1989, the return in share markets when he was in power was 15.8%.
Yeah, so everyone's more happy with Reagan than they were with Nixon.
Yeah, apparently so. But then it goes on. So you've got Bill Clinton, 17.6%, George Bush, negative 4.4%, Barack Obama, 16%. And in Trump's first term, it was 6.7%. So you've got good terms, bad terms, you've got Democrats, Republicans, and there's actually no correlation there between the two different parties for starters. That's the first thing I was saying.
Okay, so red or blue, it didn't particularly matter.
Doesn't matter. No, it didn't actually matter when you looked at the numbers. And if you think about what's actually happened, so, George Bush had a negative return during his term, but he had the GFC.
Yeah.
So,
absolutely.
How much does politics really have to play in that and predicting that is really hard.
Yeah, and we're being real sarcastic here and blaming it on the presidents. And really what we're saying is that regardless of the economic environment or whatnot that they went through, that they were dealing with during their term, that there wasn't a correlation that was readily related to what was happening in share markets.
That's correct. And even if you looked in the detail of monthly returns, for instance, around election times and then not around election times, there's no significant difference in the market returns. So there's not any particular evidence to suggest that there's more volatility during the terms of election before and afterwards.
So even when people are tuning in. The whole world was tuning in with bated breath for the most recent US election. You would think that would have some impact on share markets, but interestingly enough, we're saying that it didn't particularly play out in the data.
No, and not every single time. Sometimes it may, but not every single time. And the reason is because there's so many other factors at play. It's not just in relation to the political environment. Markets are affected by many different things. So certainly if you're, again, trying to speculate as an investor around what's going to happen because of the political parties and elections, it doesn't really, the evidence isn't there for returns to say that that's the best thing to do. Long term, again, looking at that infographic, no matter which president has been in play over time, over the long term, the markets have gone up.
Yeah. Yeah, which kind of makes sense because they're companies, right? And
that's it.
And like you say, consumer sentiment about investing has some impact on what's going to happen with share pricing, but stock pricing takes into account so many different factors that sentiment alone is unlikely to be the driver of what happens in share markets, particularly on any longer term period.
That's it. And what about if we have a look, Teneale, at the growth of a dollar over 100 years?
Yes. Well, it's always great when we're looking at numbers as well here too. So if we zoomed that out and put the elections to the side and said, well, just let's have a look purely at long-term data and understand, what has happened in capital markets over the long term. And they've had a positive return. So if we're looking to the US, the growth of $1 over 100 years of US presidential terms, stock prices have consistently moved upwards, and you would have more than $10,000 today if you had invested $1 100 years ago. That looks like a long space of time. It is. But if you exacerbate that and worked with a larger number, if I put $1,000 on it, it'd be $10 million today. And it's not just for US stocks as well too. So we've been talking a lot about that, particularly because of Trump's election. But if we're looking at the UK and other stock markets over the long term, many different governments in power, all types of different environment, but the same story holds true. If these companies that we're investing into, they want to work with that theory of capitalism. They want to increase their profitability over time, and we see that play out over long periods through all those different presidential elections.
That's exactly right. And Teneale, you touched on it then, and the reason being is because if you're investing in the share market, you're investing in companies. And I think that's the key point to not take your eye off when you're looking at investing, is that you're not investing in politicians as such. They do affect, obviously, the fiscal policy, etc., and therefore the economic conditions that the companies operate in. But as we know, companies are problem solvers.
Absolutely.
They're innovators. And it doesn't matter what political or economical environment a company is in. They adapt.
We only have to look at what's happening in social media at the moment, and how and big companies, and how differing governments and different rulings that they come through. They try and work their ways around them. They'll always try and find ways to be profitable. And the tried and true tested policy that we talk about is if you're well diversified as well too, and not hedging on that one company doing well.
That's right. So it comes back to those key principles, Teneale, around making sure that you are diversified. So even if there was the US market or the UK market or whichever share market you're invested in, if that doesn't perform very well for a particular period of time, that shouldn't be the only space that you're invested in anyway. So,
absolutely.
And we've spoke about this extensively on other podcasts, so a bit of a plug there. Go back and have a listen.
That's exactly right. Well, I think it's a really good summary of what has been happening with the presidential elections and with share markets. But for any of our listeners, if you've got some questions in this space, feel free to send them through to us. Like, share and subscribe our content. Make sure that you're asking those heated questions that you have. We'd love to answer them, and we look forward to having you next time on Wealth Experience.
Want to invest your hard-earned money but don't know where to start? Allman Partners True Wealth presents AP Direct Invest, your online self-directed investment solution. Choose from 6 low-cost exchange-traded fund portfolios, including 2 socially responsible options. To manage your own investment experience, visit allman.com.au/AP Direct Invest and start your investment journey today. AP Direct Invest, your investment solution. Any financial product advice is general advice only and may not be appropriate for you. Always read the PDS.
The opinions of the presenters are objectively ascertainable and are not intended to be financial product or personal advice.